Hi everyone, on today's episode of the Mortgage Message Show, we're going to answer the top questions for real estate closings. Hi everyone, this is LaGiglia with the Mortgage Message Show, coming to you on location from Capri, Sogno in downtown Plainfield. Thank you so much for joining us. We're here today with our special guest, Dan Fitzgerald of the Fitzgerald Law Firm out of Naperville, Illinois. Dan, thank you so much for being here.
Thank you, Joe.
We're going to try to get through this interview without getting our hands dirty in this amazing food that's been laid out for us by the amazing restaurant Capri here. But Dan, we want to bring you on for this episode to talk about all things real estate closing. We surveyed our very large database of clients and asked them for the top questions that they have that surround real estate closings. And we wanted to bring in one of the best in the Chicagoland area. And so Dan, thank you so much for being here. One of the top questions we got right off the bat was, when will a client know how much they need for closing?
Excellent question. That is something that I hear from clients very early on in the process, oftentimes. And normally what I tell the client is that we're not going to know the exact number until pretty close to the actual closing date, within a 7-day period or so before closing. However, before then, we can definitely do an estimate that would include telling the client what to expect for things like title insurance or recording fees or some of these miscellaneous fees that they probably aren't very familiar with. And that will often help them to just at least have a general game plan of what they know they're going to need to come up with.
Fantastic. A big question behind that one was, of course, is typically how long does a closing last?
So it varies from time to time, but I would say in most instances, you should expect the closing to be somewhere between 1 to 2 hours. And that may depend on, how much paperwork there might be with a particular loan or a particular lender. Some lenders will authorize the title company to go ahead and fund a transaction, beforehand, whereas other lenders like to give their final approval after everything's been signed at the closing table. But with, subject to those little variations, you're still looking usually at like an hour or two at the most.
Fantastic. So well before closing, there's a walkthrough that takes place. A big question that came up was, what if something went wrong during the walkthrough before the closing?
So that's an important aspect of the transaction for sure. When you go to the home or the condo or the townhome the day before closing or the day of closing, you're there with your realtor, and you're not going to spend hours and hours looking around the house, but you may at least check out each room, check out the main components of each room, the furnace, the air conditioning, the refrigerator. Are all those working? Is there any issues with the electrical outlets, things like that? And if you do find something that's wrong, then it's a very good opportunity for you to then go to the closing itself, and through your attorney, you can negotiate with the other side about how to resolve whatever problem has arisen. And it's important to do so at the closing, because once everything is signed, then as the new owner, everything is pretty much your responsibility.
So there's a great follow-up behind that question, which was asked, which is, let's say you have the keys in your hand, you go home, and on that first day, the furnace goes out.
Right.
What do you do as the new homeowner?
Right. After you cry,
Yes,
and
yes.
you put yourself together, and you realize that in most cases, there's not much you can do. As the new homeowner, you are responsible to handle anything that takes place with the house afterwards. But one thing that's becoming very popular that people should be aware of, and maybe even when they're researching homes with their realtor, is the idea of a home warranty. A home warranty is sort of like insurance. It's something that you can ask the seller to provide you. And oftentimes the seller is happy to provide it because it's not too costly. It's about $500 to $600. It gives you a year's worth of coverage on most of the major components inside the home. And so in that kind of a situation, if somebody has the home warranty in place and then that furnace goes out, then they can just simply pick up the phone, call the home warranty company. They'll come out. You pay a deductible, which is around $100 or so. And then if they find that the furnace needs to be replaced, then they have to replace it at their cost.
It's fantastic information. So let's say that we finally get the word from the lender that you're clear to close. And the new buyer is obviously so excited. And there's a specific document from the lender called a closing disclosure. Let's talk a little bit about the importance of that document and all the different moving parts within it.
So the closing disclosure, or sometimes it's called the CD, is a document that is supposed to give you an overview of all of the terms of your loan. The government mandated several years ago that this particular format be used by all lenders in all different states across the country so that there would be some uniformity and that people would eventually start to get very familiar with this form. So the closing disclosure is going to tell you things like how much is your actual loan amount, how much is your interest rate, what's your payment going to be each month, including your escrow for taxes and insurance if you're going to be doing that. And then it also will itemize for you all of the different closing costs that you had been looking to see as the buyer in the days and weeks coming up to closing, so that you know exactly what is your bottom line for what you'll need to bring in order to make the purchase happen.
Yeah, so good. So one of the things that is really critical is the escrow. When we talk about, and actually specific in Illinois, and I know it's different from around the country, but there's a tax proration that's involved that a client typically gets a credit back from the seller. Kind of speak a little bit about that and how that relates to their down payment.
So a lot of times people are a little surprised. I often will get a phone call or a text or email from a client, and they might say, hey, I just got the closing disclosure, and I thought I was going to have to bring in around $15,000, but it's telling me that I only have to bring $9,000. Why is that? And almost without fail, I can tell them without even having to look at the document that the reason behind it is most likely because they're getting this huge tax credit that the buyer wasn't aware that they were going to be getting. So basically the reason for that is in Illinois, we always pay our real estate taxes 1 year behind. And for that reason, when you buy a house, then you're going to be the owner of that house when the next year tax bill comes out, and that's going to be a tax bill that the seller, the former owner, really was responsible for. So what we do here in Illinois, at least, is we try to account for that by having the seller pay the buyer at closing for the amount that we think they're going to owe. And that way the buyer doesn't have to worry about calling the seller a year after the closing and working things out at that time.
That would be an absolute nightmare.
That would be a nightmare.
So that's a great segue and a very important answer to your point. So many times we get that same question on the lender side, but it's a great segue to the question of we finally have it nailed down how much money we need for closing. Speak to the question that we got from our audience, which is, do I have to wire the money? Is there a cashier's check? Can I just write a personal check? Right. Speak to that question if you can.
So pretty much personal checks not allowed, cash not allowed. Cashier's check is what most people end up doing, as long as the amount that you have to bring is under $50,000. And if you have to bring more than $50,000, then the law actually says that you must wire the money. That is a smart way to handle it because of obviously, that much more money at stake. You want to make sure it's secure and it's handled in a proper way, going from your bank to the title company's bank account. But otherwise, the cashier's check process is available for most people if they are coming in with having to pay less than $50,000. It's very easy. You can go to your bank and get that set up, in 10, 15 minutes. You can be walking out of your bank and headed off to the closing with the exact amount you need.
Fantastic. I know just because we have so many transactions we do together on your email, you speak so much to make sure you're warning clients of wire fraud. Kind of speak about
Right.
some of the practices that you put in place to be able to help protect people from that.
So the main thing is that that you make sure that if the client is having to wire money for more than the $50,000, they need to call the title company that you're closing through and speak to somebody verbally at that telephone number that we know is a good number for the title company, and make sure, essentially read back to the person at the title company the exact wire instructions for their bank account. And once you can verbally confirm that, then you're in good shape. Normally the title company will send the wire instructions either by fax because that's a little bit more secure than just a regular email. Or if they are going to send it by email, they're going to send it by an encrypted email, which is great, but it can't hurt to then take that second step and verbally confirm the instructions with your title company too.
Fantastic advice, Dan. So as we kind of move into this second half of the year, we know that the pent-up home buying season has already picked up. We're seeing signs of what's going to be an unbelievable year for housing. as somebody who is, as I said, at the top of their game in the real estate legal field, speak to kind of how you set up a client for success for a closing. What steps does the Fitzgerald law firm take to set up that client for success?
So I think that I'm pretty detail oriented most of the time, but nonetheless, I realize that when things get busy, as it is in the market right now, it's always good to have a set of procedures in place so that you can always keep your memory fresh about the particular details of any transaction when you're getting ready to close. After a while, some of these things can, start to just go through your head. You forget which closing might entail the closing credit, and then the other closing might be the one that you're worried about the home warranty and things like that. So what I try to do is set up my file, and my paralegal, largely helps take care of that for me, where I can have all the basic information on my file folder. At a moment's notice, I can just pull it up and take a look and remember what kind of purchase this is, what kind of loan we're looking at, and things like that. And then when it gets time closer to closing, that's when I sit down and kind of review the whole file a little bit more in detail so that I know what I'm looking for specifically at the closing.
Fantastic. So, Dan, as we come to a close on this episode, what's a one piece of advice that you would give after all the different closings that you've had in your career? Just a couple pieces of advice, or one piece of advice for the person who's watching, maybe even the first-time home buyer who hasn't been through it yet. What's one thing or two things that they can really do in advance to set up that path to home ownership the best way they can?
Well, I think it's important for people to plan out the process, well in advance. They should be planning ahead, even before the time that they know they're actually ready to buy. But maybe sitting down early on with their lender and finding out, okay, what are the things that we need to be doing in order to maybe improve our credit score, or take care of certain things, that'll help make us a more attractive borrower. And then from there, the other piece of advice I would give is that clients, a lot of times will benefit from listening to the people that they're working with. Like, for example, if they have a realtor in mind, and the realtor says, I have a group of lenders that, I've worked with closely and that I really trust, take that to heart when your realtor is giving you that recommendation for somebody, because it'll probably make your closing go smoothly. And that way you can look at it as sort of a team. You have a team of a realtor, a lender, and an attorney working together.
Fantastic advice, Dan. For the person who's watching right now, whether they're buying their first home or their last home, if they want to get a hold of you, ask any questions, or actually look to hire you, what's the best way that someone can get a hold of you?
So they can either reach me by text or phone call at 630-885-2695. Or also email is great, dan@fitzgeraldlawpc.com.
Thank you to everyone who's been watching. This has been another episode of the Mortgage Message Show, joined by my guest, Dan Fitzgerald of the Fitzgerald Law Firm. I want to give a special thank you to our amazing friends and staff here at Capri, Sogno in downtown Plainfield. We're about to get into this food right now, everybody. We'll see you on the next episode. Take care.